Hello, everybody, and welcome to the NextGen Planners Podcast. This is the space where every week I get to talk to another brilliant person inside and outside financial services and have a little bit of a deep dive about something related to you and what we do in this industry. And I'm very excited about the guest this week. From the conversations we've had so far, I'm sure this will be a really, really interesting, insightful episode. So without further ado, I will welcome to the podcast CEO and co-founder of MyArc. It's Jen Lothian. Welcome.
Hi, thank you for having me. What a nice introduction.
Oh, my pleasure. It's an absolute joy to have you, and I'm excited to get into some of the nitty gritty in this conversation today. But what we like to do with all of our guests before we kind of delve a little bit deeper into a particular topic is just ask what a day in your life looks like. I'm sure not everyone is exactly the same, but just on the whole, what does a day in the life of Jen Lothian look like?
Varied, as any founder I think will tell you, but generally the alarm goes off at 6:30. I wrangle two small children out of bed and go through the joy of trying to get them to stay alive, so get themselves dressed, fed, all the rest of it, and then straight into work. They go to quite early school so I can get a full day's work in. My husband normally drops them off. I go straight to work and my study. And then it's lots of phone calls, maybe a podcast like this, which makes a bit more of an interesting day, talking to potential companies that we could work with. I do quite a lot of articles and insights for various organisations that we work with. Speak to the team first thing every morning. And then probably about 2 or 3 days a week, I'm in London. And then it gets through to about 6 o'clock, 7 o'clock. And I'll stop, try and wave at the children again for a little bit. And then again, because I am founding a business, after that, I'll probably log back in some way, shape or form before going to bed.
Yeah, so busy in a nutshell, full on.
Yeah, it's certainly, I'm not sure I've ever not been busy though. So when I look back, I've had feedback from friends and family that says it doesn't seem to matter what job I do, I tend to do a lot. But I think it's fun that way. And the trick is if you're doing something you enjoy, that old adage. And then there's always, I think time's something you can use really well or just it flies past. And so I like trying to use it well, which isn't for everybody, but it is for me.
Yes, I think my parents saying that they live by is if you want something done, ask a busy person, because you'll always find some time to fit it into your schedule. But
yeah, and I know that I'm really bad if I'm lazy.
No, you carry on.
Sorry. No, I was just going to say, if I'm not doing stuff, then I don't do anything. So I'm not sure I'm great at the art of moderation, which is a lifelong process to try and get better at, but I seem to be failing abysmally. So I stick with a very busy rather than not busy enough.
Makes sense. I think that probably sounds about right. So you're talking about as a founder, maybe what might be useful to the listeners today is if you could just give an overview of what you founded, of what it is you do, what is MyArc, and then we'll kind of talk about data and all sorts of interesting stuff to do with that afterwards.
Yeah, absolutely. So MyArc basically kind of finds and consolidates all an individual's information that's all over the place and hard to find. And we create the first autonomous and continuous personal data warehouse or personal data treasure chest. And we do that with no manual entry. So we do that by using some proprietary AI, some very cool encryption, and technology that's only kind of recently been around and enabled us to take that approach. And what we then do is we then have data, and data with no context isn't very valuable to anybody. So we then give it context to people so they can see, for example, what their total household outgoings are. We can see what their total cost of car is. They can see when renewals and alerts are up. We can see what the whole family wealth is. And I think that's particularly pertinent for this conversation. But we connect not just individuals, but households and families with a dynamic data sharing, which gives us a much more complete understanding of people, again, as an individual or a household or a family.
Yeah. And what made you want to go into this area? How did you find this niche and this kind of gap in the market?
Yeah, so my background is a bit mixed. So I was originally in the army very, very long time ago, and spent almost 9 years doing military stuff. And then I went into banking and finance. I've worked on the trading floor. I've worked in technology, private equity, asset management, and then most recently, because I was in finance for over 13 years, as a chief of staff at a company called Marex that's just listed on NASDAQ for, I think, 1.3 billion. And my role there was obviously doing the kind of normal chief of staff role, but also done a lot of data transformation. And so I was trying to get the data into a shape that could then be used to help generate better insights into the business, which is really important when you're going through any IPO, and so listing on the stock exchange. And the more time I spent working on data in the workplace, the more apparent it became how much of a gap there is in the home. So you wouldn't try and run a business, whether that's a giant, multi-billion business, or if you're an individual financial advisor, you wouldn't run it without knowing what your income was, what your gross and net revenue, what your outgoings, what your fixed costs, what your variable costs, what your assets are, your depreciation. But when you ask anybody, you say, how much did your home cost you last year? Almost nobody can answer it. They can give you a best effort, but probably not completely. And then when you think about car, children, even a pet, what that total kind of cost is. And so when I started thinking about why that was, it's because the data is really, really hard to come by. And no normal person who is sane would want to sit there and have a spreadsheet with their BT account number and how much it costs them each month. So I was like, actually, if we can find a way to do that for people so they can have that information readily to hand, like you would in a senior leadership team or a board in an organization, then maybe we can help people make better decisions for themselves.
Yeah, absolutely. It makes so much sense. And data is such a buzzword at the moment, especially with this boom of technology and the revolution that's revolution, both of those things that's happening within financial services and the adoption of different, loads of different tech in many different forms. Data kind of is the fundamental piece of all of it. Without data, you can't add on all these different kind of specialized techs or whatever it is, APIs. So why do you think data is important in wealth management, and how does it impact financial decision making?
Yeah, absolutely. So I think AI is a mixed blessing at the moment, and I think it probably is a revolution and an evolution and everything all at once. It's one of the challenges with AI is a lot of people don't really understand it, which is very understandable, as with anything new. AI only works if it's got the fuel to make it work, which is data. And often what AI can do is it produces something called AI hallucinations, which is when the AI doesn't have the data but needs to answer a question, it can fill in the gaps, it kind of makes it up. But AI isn't quite as smart as we like to think it is in some ways, particularly generative AI. And so what is really useful is being able to take out some of the friction that stops people being able to get on top of their situation. And that's what we try to do. But where it can also be dangerous or potentially detrimental is when it starts generating effectively false positives or what we call the AI hallucinations. But if you can get accurate data and you can get all of the accurate data together in one place, then actually it benefits not just the consumer, but the financial advisor. So even just taking it down to the real basic 101 example is you do your initial fact find and or pre-screen, depending on kind of how you want to call it, and you're asking a lot of data points that don't allow you to add value, but instead can just be annoying for your potential client. So there's a friction to onboarding somebody, and some of that is simple stuff like date of birth, address, are you married, are you not married? All of that information can theoretically be ready at the touch of a button. So the friction it takes to onboard a customer plus the value that you add can be initially, the friction can be reduced and the value you can add sooner can be increased because you're not chasing somebody for their date of birth. And then secondly, like I was saying with the example of the business versus the home, if you can see a complete picture of the individual, then you're in a much stronger position as a financial advisor. Not only are you not wasting your time chasing them for the latest statement that they might not have access to, but you can get all of that available and more complete. Because one thing we've really found through this journey is that it's not that people genuinely want to be disingenuous. They're not trying to lead people astray, but quite often they don't know. And if people don't know, a bit like AI in some ways, they kind of can sometimes make up the answer, which isn't necessarily completely accurate. Or people don't know the picture to give over. So an example of that is when you're looking at total costs. Ages ago, my husband was like, oh, well, this is our mortgage, these are our nursery fees, so our household outgoings are probably about this. And he's kind of a smart guy. He's a chartered engineer. Not chartered engineer, was an engineer and didn't go chartered. But he, when he first was thinking about it, and he had, the cost of the mortgage, the cost of nursery fees, which are 2 biggest outgoings, the total cost still only came to just over half of our total monthly outgoings. And so if somebody said to him, what's your total cost? He'd have said X amount, which was kind of reasonable because it's the 2 biggest costs, but he was literally about 50% out. And that's somebody who's kind of reasonably financially literate. And so when you're asking somebody to give you the information, they not only can only give you the information available to them, but they'll only give you what they can think of. And so actually by being able to create a complete and completely accurate, because it's not affected by sentiment, again, the financial advisor is in a significantly better situation to advise accurately on the individual circumstances.
Yeah, absolutely. I mean, what a great comprehensive answer there of really looking at some of the problems of accessing data, utilizing data, and the impact that then has in being able to make informed decisions about your clients and how to best serve them and be there for them. I guess another crucial aspect of utilizing data is the context of that data as well. So why would you say it's important for advisors to consider context when analyzing this data? So say, for example, they've got the data, but that on its own isn't necessarily the most useful, infallible thing.
Yeah, so I guess there's a couple of different ways to look at that. The first one is, how broad does your data set go? So there's going to be over 6 trillion in assets passed down intergenerationally in the next 30 years. That's a huge amount of money. So if you're thinking about managing, and this is like 101 for any financial advisor, so not saying anything new, but what an advisor needs to do is look at their client's wealth and their whole client's situation. Whilst a lot of people don't like to take into account intergenerational wealth, so inheritance, etc., because you never know when somebody's going to pass away, you don't know if they're going to have cost of care, etc. Depending on how you manage intergenerational wealth transfer, there are components that you can lock away, you can put money into trust, etc. So if you're trying to look at a scenario where you're only looking at one individual, but you're not looking at the whole context in which that individual sits, then they're in a very different position to advise, or the outcomes of the advice might be very different. And so whilst you're giving advice to the very best practice, to the best of your knowledge, if you don't have that intergenerational context for that information, then you're missing out potentially large chunks. Now, we all know that some people obviously don't want to talk about dying. We know that some people don't want to talk about passing wealth down, that particularly in Britain, it's been scientifically proven that financial coaching doesn't do very well. The surveys and the research that's gone into it have demonstrated that as Brits, we're really bad about being honest and open about our financial circumstances. But with a financial advisor, it's hopefully a more long-term relationship, but still the best advice that somebody can offer is based on the most complete information. And so really what we're trying to do is not only say, this is about your costs that you spend on your house, but how does the whole household interrelate? How do you look at planning siblings, children, parents, etc.? And then also what are the aims for that individual? And I think one thing that's really interesting to us, for example, is 95% of eligible adults don't have a lifetime ISA. And the lifetime ISA is such an easy product for anybody to get an immediate 25% uptick in. And so that's not because 95% of people don't want it, it's because they're not aware of it. They haven't got the so what that's associated to them that there might be if there was that kind of broader purview.
Yeah, for sure. And I'm also glad you mentioned the intergenerational side of things, because that is definitely something we're going to come back and talk a lot more about. It's incredibly important and is going to be important for advisors moving forward in the future. But sticking with this topic, if advisors are then really leaning into understanding the broader context surrounding an individual's financial situation, how does that then enhance the advisory process as a whole?
Absolutely. I think all of this goes back to just the 101 basics, which are the better prepared you are to make any decision, the more likely that decision is to be accurate. And it's something I really learned in kind of corporate finance, particularly in chief of staff roles, when a big part of your job is to make sure you're getting not only complete data, but accurate data to your principal, to the CEO, because they can make the best decisions. But if it's on incomplete or incorrect information, then the outcome isn't going to be as good. And so it's about both the completeness of the data and the accuracy of the data that's available. And I think where advisors can really move the dial is by finding smart ways to be able to get hold of all of that information and making sure that it's accurate. And it's really easy. I'm sure you've been in a situation as well, Amelia, where you've got slightly out of date information, or you maybe changed job and you haven't told your financial advisor, but the package is very different, where potentially you even had a child and not, because you only you meet a minimum of once a year, you could have literally got pregnant, had a child in that time, and it's that lack of continuity of data which means unfortunately the data becomes stale and therefore it becomes inaccurate. And I think years ago that didn't matter as much. We lived lives that tended to be much more stable. People didn't move jobs as often. They didn't move houses often. Now there's such a high frequency of role moving, high frequency of change in salary and package, change in circumstances, that unless you're on top of all of that, you unfortunately by default are incorrect in some of that information. And it's so easy to go through scenarios. And again, with a financial advisor, depending on the relationship you have with your clients, and I know in the past, I felt like I've been asked very personal questions by my financial advisor because I didn't understand the so what of that information. So, for example, somebody might ask you, when do you want to have a child? And you want to go, well, hey, that's none of your business. But it's so pertinent to that planning scenario. And so, again, I think where I'm not sure we're doing as much as we can do generally, but also within kind of the wealth management space, is making sure that not only data is accurate at the time of consumption, but continually updated, and that nothing significant is missed.
That is such a brilliant point. And I've had a lot of conversations about, how important data is, and especially looking at using AI or using many different tools to increase efficiency. But the idea that we need to get our heads around that data isn't static, that data doesn't stay still, that people don't stay still. So why would their circumstances? That things are always changing, our contexts are changing, the world changes, our decisions change, and the data needs to make sure it's keeping up with that. Otherwise, it's useless because it's not accurate and it's not going to help you make those decisions. And yes, a year to year is a huge amount of time. in people's life. If you look back, the amount that can change in a year is really wild. So yeah, I think that's a really, really important thing for people to be thinking about. And I was wondering then, do you have any kind of specific examples of how making decision with data without considering context leads to or could lead to ineffective advice?
Yeah, and I think, again, none of this is ever intentional. I think so much of this sits in unintended consequences, because any wealth manager is going to ask the questions. I think the issue with asking the questions is, are you going to get a complete answer? And are you asking questions at the right time? So even on a really straightforward level, if you think about insurance products, and a lot of financial advisors will recommend and effectively sell insurance products. If the circumstances have materially changed and you sold somebody that insurance policy and they then come to claim for it, you can then be in a circumstance where the insurance policy is nullified or voided effectively. And so then if you're a client, my first point of call, if I took out a critical illness policy or a life cover policy through my financial advisor, would be to go after the financial advisor. Now, technically, they've done nothing wrong. They've got the information as you should do at the time of getting the insurance policy. But it's very easy now, because there's so many more moving parts, to invalidate some of these policies. So, even moving house can invalidate certain policies. And so it's really being clear, not necessarily that you're going to get the product wrong in the first instance, but that the product that has been sold can then be invalidated, and trying to make sure that nobody's in a situation where that can happen. And then when it comes to kind of investing in core products, I think that's very much, for everybody, it's very much taking into account individuals' circumstances and thinking about what they need going forward. But an occasion where I was arguably, I wouldn't say missold, but ill-advisedly sold a product, was I was thinking about becoming a contractor. And so my now no longer financial advisor suggested I took out a private pension. Now, that was not great advice. And the reason I say it in that instance was I was still in a employed role. I get the NI back as part of me paying into my work pension rather than a private pension. And actually, it transpired that I then didn't go into a contract role. I went into another permanent role. And so all that happened in that scenario is that I effectively filled my financial advisor's coffers with over £2,000 to set me up in a pension that I should never have taken out. And that, it could have been ready to go for when I did become a contractor. But my opinion on this is that the better advice would not have been to set up a private pension. And again, that was, if I give him the benefit of the doubt, that was something that was set up on something that could happen, but it never did happen, and then it didn't change. And I think maybe with a more complete purview of the situation, then that is another example of where really making sure you are on top of the data and the decisions you're making are timely, you're more likely to have a better relationship. And so as a result, whether anything was missold or not, it eroded my trust in that financial advisor. And my husband and I then both moved financial advisors after that.
Yeah, of course. And it comes back to, that relationship and that trust that you build with your client is the most important thing. And without that, you don't really have anything. And so anything to enhance or strengthen that core relationship is going to be beneficial. And obviously, this is just one aspect of a relationship that you have with your client. And of course, it's asking the right questions, making them feel comfortable, feel like you're understanding them. And there's a whole other conversation around that as well. But sticking with the one that we're on at the moment, with data, let's bring things back to MyArc, because as you very well detailed at the beginning, it's clear how MyArc can now come in and help that kind of process. What features specifically does MyArc offer to assist users, planners in organizing and interpreting their financial information?
Yeah, absolutely. So we are going to provide a whole of life proposition, which includes car, pet, children, end of life wishes and directives, health and well-being, etc. Because we're still early stage, we've decided to focus on property. Almost everybody has some form of property in which they live. The majority of people live with somebody else. And very rarely does one person pay for everything and the other person not pay for anything. And so we thought it was a really nice, knotty, complicated module to start with. And effectively what we're able to do is we integrate information from open banking. We're doing some open finance as well, from APIs such as land registry, ONS. We'll do the DVLA when we get to car. We also can use our own proprietary AI to read bills and utilities from a hard copy. So if you get a council tax still in the post, and we pull all of that into one piece. And we use our AI also on the soft copies, the PDFs that come through. We also connect email. So what happens to a lot of people, and it's happened to me as well in the past, is you'll get a renewal, it'll go to your junk mail, you won't get a reminder, and then you'll find yourself without house insurance for a month. Now, that's not potentially the end of the world, but if that was your car insurance, that really would be the end of the world. So how do we make sure that all of this is consolidated? Now, there's quite a few apps out there that look to be either a digital vault, which is great, can store all of your most important documents in one place, but it's still what we call dumb data. It doesn't use that data to do anything with it. It doesn't give it the context that we've been talking about or the use case. So we transform all of the data from this PDF view into effectively data that we can then use. And that allows us to create insights in the platform. So it creates a visual of how much your house costs you, where the money's going each month, whether you're above or below your average monthly, and we're not talking about spend as in I bought a pair of shoes, as in spend on electricity, water, etc. We were also able to identify whether you're in credit or debit with each of those accounts as well, which is not currently available in open banking. And so with all of those data points together, you have this very complete understanding of household and household costs. Now, when you're doing affordability assessment, for example, you need some additional inputs, but arguably some of the most knotty components are the bills, utilities, the insurances, the mortgage or the rent, etc. And we're able to consolidate all of that with pretty much a click of one or two buttons to make sure that that's readily available. And I think part of the intent is that it will give not only the user more confidence in their actual situation rather than their sort of best guess situation, but it means that anybody with whom they're working, whether it's a mortgage broker or a financial advisor, etc., is then in a position to give best advice on the actual circumstances rather than the potential best guess circumstances. And I think certainly from our perspective, that gives us a bit more comfort that the best advice, the advice being given is based on the right information. And we're certainly not looking to be financial advisors. We're not looking to enter into that space in any way, shape or form, either now or in the future. What we're looking to be is the consolidator of data that then allows the experts to consume that data and build on that relationship with their customers. So exactly to your point around trust, how you can build that longevity, that trust, because you're taking away some of the friction and the boring bit, and then able to just have really engaging conversations about what people really need, what their aspirations, what their dreams are, because you're not having to worry about how much you spent on pet food last month.
Yeah, definitely. And it's so exciting, just watching how this is now a possibility that a few years ago, you wouldn't have thought that was a possibility at all. How do you envision things moving forward? How do you see technology evolving even more to support data management and analysis? And where do you see MyArc fitting into all of that?
I mean, I think the use cases for technology at the moment are so exciting. I think there's a lot of hot air and a lot of false use cases. So one of the reasons we wrote our own proprietary AI language model is for security. So if you're using any of the larger publicly available language models, the data is often consumed and then used by that language model. That's starting to change, but it's still high risk. And so one thing I think there's going to be a lot of focus focus on is around data sovereignty and data security. And I'm not sure everybody is as aware of how much their data is being used, whether they've given permission for it or not. And we've got GDPR, which everybody will know and probably not love. But the intent of GDPR is valid, right? It's to try and allow people to have sovereignty over their own information and purchase about their own online presence as much as anything else via their data. What we're doing, I think, is really leveraging some technologies that have only been readily available for the last 6 to 12 months in some cases, to really allow people to have that data sovereignty and to flip consumer data on its head, so that you have your whole packet of information, rather than giving some to the bank when the bank needs it, a bit to your advisor, a bit to the supermarket, etc. You don't get to see your complete picture. It's all dislocated out there. And actually, if you can hold it yourself and own it, it doesn't prohibit others accessing it. It just means for the first time it can be consent driven. And some of the technologies to enable that haven't, again, existed until very recently. So we think there's a few themes. The first one is the noise around AI is hopefully going to quiet and really focus on the important risks and the important opportunities. I think that might take a little bit of time. I think there's a huge move towards better individual data. So the FCA have done some really, if you're a geek, some really interesting white papers on this in both 22 and then 23, to try and identify ways in which what's called the customer information segment can be improved. So that's the Experians, the Equifaxes, where a lot of the data that financial advisors may get comes from. But the data and accuracy in that space is huge. So an interesting relevant fact for this audience is probably that across the main data credit reference agencies, there's up to a 40% accuracy or 60% inaccuracy in defaults. So if you think about one of the biggest determining factors whether somebody can get a home, a loan, or all sorts of other financial products, it's to do with their default. And so that alone, to clear that up, can be hugely impactful on individuals' lives. And it's one of the main reasons why first-time buyers get refused for a mortgage in the first instance, is either incomplete or inaccurate data. So I think there's already an awakening in the regulator's mind that needs to be improved. And then, as I mentioned earlier, this thing about AI hallucinations, where the AI makes up the data. And so there's this data proliferation with AI, but it's reducing the accuracy even further. And so in this sort of world of data overwhelm, without information and knowledge, I think there's going to be much more focus on turning that data into the information and knowledge to give it context and to make sure that people are making decisions based on accurate rather than misleading data and therefore information and knowledge.
Yeah, so many different points I'd love to lean into more in that conversation. I think, the idea of safety and security with the boom of technology is something that is really on everybody's minds. And I think a lot of the time what stops planners and advisors adopting new technology or venturing out into that space, because it's the technology is advancing so quickly, there isn't the regulation to keep up with it. There isn't the control of, okay, well, what is happening here, and where is this data going, and who can access it, and how can I protect very sensitive information of my clients? And if I can't do that, then again that trust point is gone. So yeah, some really interesting and important things that I'd love to lean into more, but there's one more topic I want to discuss in this podcast while we still have time, and that's navigating generational wealth dynamics. And it's clearly becoming even more and more important with this huge shift of wealth that is going to happen in the coming decades. So what trends do you anticipate shaping the generational wealth landscape generally in the coming years?
I think one of the most interesting trends that we've been really thoughtful of is how digital people are at different generations. So before, we had this sort of stereotypical mindset of the elderly generation aren't digitized, they don't use the computer. Now, whilst there are components of that, that's kind of becoming less and less the case. Like, my dad is 80. He's really, really good with the spreadsheet. It's the people who were who were 50 a few years ago are now retired 15 years later. And we don't think of 50 as a demographic who aren't digitally literate. And so I think you struggle certainly in 10 years' time to find many of the pensioner or the retiree bracket that aren't digitally literate. And so I think there is maybe a little bit of a lag in the stereotype of how we perceive the elder generation. And that's probably because we're on the cusp of digitally literate and not as digitally literate demographics. But certainly when we're looking at some of our sort of 60-year-old cohort for the app and the research that we've done, digital literacy isn't such a concern. Security, so sub 30, nobody gives a hoot about security because everybody's sort of accepted that their whole lives are online. So between 30 and 60, you do have a security concern, but that can often be addressed with some information and some guidance around what is and isn't secure. And I think there's a lot that can be done that maybe is a little behind where it could be, which is how you embrace digitizing effectively the next pensionable generation. And one of the things that then unblocks is information. So if we think about the original stereotype of somebody passes away, all their information is on paper, in a box, somewhere under the sink, and it's an absolute living hell for everybody trying to resolve it, particularly if it's intestate or whatever else. I think now what we're looking at is that we still have a lot of the British mindset where we don't like talking about money, we're not great with financial counselling. But one of the use cases that we feel very strongly that MyArc offers is the ability to, without having to have that conversation in person, without having to say, I'm going to die at some point and recognizing your mortality, is you can start to collate the data. And actually, when we looked at end of life planning, the data that you need for probate and the data that you need for a mortgage, there's almost about 80% correlation between the two. And so we really see death as just one of many life events. It's just the final act of the show. And so if we can get people to be more familiar with using digital products, with being on top of their information and their circumstances, I think that can really alleviate a huge amount of the friction, the lack of opportunity to plan intergenerationally, and then a lot of the family wealth that is therefore lost through potentially unnecessary tax burdens because there hasn't been the opportunity to plan that wealth as an intergenerational rather than a single generational construct. And then finally, because we have the ability to choose how you dynamically share. So, for example, I could choose I've got power of attorney for my father, so does my brother. We can share my dad's modules, but he doesn't want my husband to see it. So my husband and I share our house, and we have the permissioning structure to do that. That then starts to mean that you can then actually see for the first time ever an accurate wealth map for siblings, for parents, for children, for partners. And we think that's a really exciting opportunity for everybody within that space to really optimize their personal circumstances.
Yeah, definitely. And that really feeds nicely into my next question. Looking across those different generations is, how can advisors adapt strategies to effectively serve clients across different generations? And that seems like a great place to start, where you're really paying attention to what these different individuals are looking for and what they need.
Yeah, I absolutely agree. And I think one of the challenges that we've certainly, so in previous lives, when I've been working quite closely with financial advisors, is you lose the assets under management when somebody passes away because you don't have a personal relationship with the next generation, and you don't have any access to them at all. And so one of the things that MyArc is looking to unlock is that access to that intergenerational relationship. Whether it's for the same financial advisor or part of a firm, or you're making a whole decision, is very much going to be driven by the end user, and that's down to the financial advisor to build that trust. But for the first time, we'll be able to generate that access point, that conversation piece that allows you to have that first engagement, and by being value additive rather than asking somebody for their date of birth again.
Yeah, for sure. So I've got one final question before we move on to the last two questions that we ask everybody. And that is, looking at things more broadly then, what are some key considerations for advisors when developing intergenerational wealth transfer plans?
Absolutely. So first of all, it's about, and I will sound like a broken record, but getting all of the information available. If you don't have all the information available, I think that's a big challenge. I think the second one is having a mechanism to have the conversation that doesn't make people feel like you're either trying to knock them off and steal their money, or that you're forcing people to face the mortality that they're not ready to face. And certainly the research that we've conducted, which is now kind of reasonably extensive, is they're the two main limiting factors. It's not practical, it's not technical, it's emotional. And it's getting people over that emotional hurdle. And so really depersonalizing it, which that feels counterintuitive, depersonalizing it, making the questions much less around death, much less around the fact that, your child wants to have a conversation because they want to make the most of your money when you're gone, is gruesome. And so we purposely designed the platform, although you could do it in a spreadsheet or a piece of paper if you needed to, in terms of just starting to have some of these conversations, moving it away from the concept of death, moving it away from the concept of somebody nicking the money, and really starting to see end of life planning very much as just one of many facets of in life planning, in the same way that as soon as you have a child, how are you setting that child up for the long term? Have you got a child ISA? Have you got a bank account, etc.? And switching that dialogue to just be part of the life journey has been what's really unlocked it for us, and with the research and with the individuals with whom we've spoken.
Yeah, brilliant. Thank you for those brilliant insights there. That was really, really interesting and insightful. 2 questions then for you, Jen. The ones we ask everybody on every single episode of the NextGen Planners podcast. And the first of those questions is about a book. So we always ask somebody, our guest, if they could share a book that's helped them either personally or professionally in their life. So do you have, I think you've got more than one, actually, if I'm not mistaken, to share with us today.
I have two books. I cheated and couldn't make my mind up for 2 different stages. So this one is the originals by Adam Grant. He's an occupational psychologist, so psychology in the workplace. I actually think any parent should read it, because it talks about really like how you encourage people to think in a different way. I read it before I even thought about doing a startup, but it's really about embracing diversity of thought, not in the kind of the well articulated way you need women and men, blah, blah, blah. But it's really about going, how do you come up with really clever ways of thinking about and doing things, and original thought, and how that can really empower business. So I love that one for anybody. And then this book, it's a proper tome, is really worth reading. I actually read it on audiobook first and then got the book. It's basically a compilation of lots of learnings from research, psychological papers and research as to how to, for want of a better way, get people to do what you're looking to get them to do in a not nefarious way. But it's really understanding what motivates people, how they make decisions, how you can persuade them to make a different decision. And it's invaluable, I think, for anybody that deals with any form of customer.
Yeah. So what was that second book called?
That one is Influence by Robert Cialdini. I can't ever pronounce his surname. But yeah, whilst it's a bit of a tome, it's worth reading.
Yeah, amazing. Great recommendations there. I really like the sound of the first one. I think I might audiobooks is my vibe at the moment. Go for a walk, put an audiobook on. That's where I'm at. So yeah, that sounds like a great recommendation. Finally then, big question to close out the podcast today. Very broad. Take it in whichever direction you so please. And the question is, what are you most excited to see in the world of finance in the next 10 years?
I am most excited to see, and this is part of our vision, that nobody is disadvantaged by what they don't know. So the technology just hasn't existed to stop that from being the case. When you're working on post-it notes or things being sent in the post, or any form of physical document, or data being very segregated by corporate organizations, we've only just on the cusp of technology that allows us to really democratize access to data more broadly, but to individuals' data. And I just love the idea that we can bring a much greater parity to this world with nobody being disadvantaged by what they don't know.
Yeah, absolutely. I'd love to see that too, and hopefully, it will keep getting better and better in the next few decades. But that is all we've got time for today. So thank you so much for joining me. As I promised up top, an interesting, in-depth conversation. I think you very much delivered. So thank you so much for joining us.
That's really kind of you. It's been a pleasure to be here. Thanks for having me.
Thank you. So that was Jen Lothian on the NextGen Planners podcast. If you enjoyed this podcast, you can check out all our previous episodes on Spotify, Apple, YouTube, and Google Podcasts, and also on our website. On that website is where you can then find loads of information about our brilliant community. And finally, if you can, do leave us a review. It really does help to grow the podcast and get it out to even more people. Thank you very much.